Hello everyone, welcome back to my channel, Trade with Intentions. I'm bringing you a video here. Although I'm not live, I'm recording this. It's 8:39 a.m. I'm in my 8:30 to midnight strategy, and actually this might be my first loss of the week. To be honest, I think today the way the midnight and the 8:30 both opened up, I think I might be going for a loss today. But hey, that's life, and that's the way sometimes trading works. We learn lessons every day, and we do our best to learn from those mistakes, right? And I think today I'm learning from this mistake. So let me just run by here kind of the methodology of why I took this sell position. So again, this was a toss-up for me. As you can see, the 8:30 midnight, they're right there. So usually, you know, how I would again take this position is when the 8:30, when the midnight price is above the 8:30 open, and then when the 8:30 closes below its open, then I usually take a sell position. And normally what I would do in this scenario is if this price, for example, if you look at the EMAs, so this is the 100 EMA, and then the green one is the 50 EMA. So what tends to happen is when the 50 EMA, which is right here, when this is above the 100 EMA, and then that's above the 200, which is down here, I tend to take a long position, even though the 8:30 opened below midnight and it closed below the open. I would have taken a sell position. I'm sorry, a buy position, if these EMAs were aligned to a bullish bias. Now, as you can see, the moment I open this position here at 23, it was a 787, it's already gone up 20 points. Oh, actually, let me see. Yeah, it already went up 20 points. So I would have already been out of my position and I would have won. But I took a sell position because they weren't aligned properly. And, you know, maybe it does come down to my take profit here at 800. But as you can see also, I put my stop loss. It's a pretty high stop loss, right? It's a 2,500 risk. Again, I'm using my paper trade account here with TradingView. And I suggest you do the same. This is how I forward test my strategies to make sure it works. I try to do it in real time. Sometimes because I work full time, sometimes I miss the 8:30, 8:35 entry. And I have to go replay it and see what would have I done if I were live in that position. So, but for the most part, I get to forward test this position, and I really, really like this strategy of mine. But let me just kind of zoom out a little bit. So as you can see, the buy side liquidity here is resting at an all-time high. So unless we get some kind of push to the upside, I really don't think, I can't foresee it, at least for the time being, going all the way up there right now. Maybe it goes up there, at the 9:30 open. Maybe it makes a new high. But that's where I put my stop loss. So that's why I try to put my stop losses. If I would have taken a buy position, for example, I probably would have done it down here below this sell side liquidity, just to give it some breathing room. Again, I try to give this trade some breathing room. I'm not very set on, oh, you got to do a 1-to-1, you got to do a 2-to-1, or whatever the case is. Like right now, it's a 0.32 R reward. And hey, it worked out yesterday for me. So I'm up on the week. I am up 2,400, and you know, I might get a loss today, but look, this is And so what I tend to also do is that, see, like I have this buy side liquidity. I would probably get out of this position, and this is just, again, me thinking, but instead of having the price go all the way up there to my stop loss, I might just wait for it to come up here. So this is another swing high here. Might not get respected at all, but this swing high here is definitely a buy side liquidity trap. And yeah, I would probably wait for it to come up here to get out of the position before it even goes up. I mean, it could literally go up here, wick this buy side liquidity, and continue down, right? And like I mentioned before, sometimes what I like to do while I'm in this trade to kind of give me a confluence or give me some kind of an idea where to put my stop loss, I try to have open here Bookmap, and now I'm not paying for Bookmap. This is not a sponsored video or anything like that. But I tend to go on this YouTube channel, Order Flow Stream. This guy puts his Bookmap live, and this is NQ right now, so that I'm following. So as you can see, there's a lot of liquidity resting up here. As you can see, there's a lot of liquidity resting there. There's liquidity down here resting. So when you look at Bookmap, you look at, look at all these orders here, right? You look at all the buy orders here. So, you really have to make a judgment call on this, because, so if we look at, where we're at 794. So let me see, 835. I think that's where the all-time high is. Okay, now all-time high is around 845. So if we go back, yeah, so see, all-time highs are resting right there. There's most likely sell limit orders up here, which is, some people, that's what they have some limit orders up here. There's some limit orders here in the 835 area. And there's some buy orders down here. Now, I will say, if you look at this mark over here, this tells me that there's probably a lot of stop buy orders, or stop sell orders, I should say, from people that took this position up, right? And there's a lot of orders resting here in this area. So, 750, if we go back to where this liquidity is at, yeah, it's right there. See, I kind of have it pretty much marked out the way it should. So also, this is another thing to think about. When it comes to like where price might move next, we have our sell side liquidity and our buy side liquidity. So these are considered external range liquidities. External range liquidity. And so, or in other words, EARL. You'll see that a lot on YouTube. And then, fair value gaps, those are considered internal range liquidity, right? So internal range liquidity, right? Oh, liquidity. And EARL. So when I look at what's happening right now, and we're on the 5-minute chart, so I kind of like to maybe go up one and just see if there's any liquidity there. As you can see, there was a fair value gap right down here that was already taken, right? So this EARL is no longer valid. So that's what price does. It moves from one type of liquidity to another. And so right now where I see things happening, there's only either the buy side that is going to go to or the sell side. My guess is that it might take this buy side liquidity. And we're talking about, let me see the 812s. So let me look back at Bookmap, and you see there's liquidity resting right there. Just like we said, there's liquidity. So there's probably either sell limit orders there, or stop buy orders, right? So some people that took a sell position, let's say right here, maybe to put their stop losses right there, and the market hasn't gone down yet, they'll probably have their stop losses here, or some people might have their sell limit orders there. But I think that price will move up here and then continue down to take this and then probably work its way back up to these high levels. At least that's my projection, just by looking at this. Now, I could be totally wrong. It could probably come down here first and then take all of this. So you might have a move, something like this. Let's see. Where's my drawing tool? Whatever. I'll use this one. So you might get a move like this and then come down here and then come back up, right? You might get a move like that. Or you could get a move like this, right? You come down here and then you shoot back up and everybody's happy, right? I would definitely be happy if that were to happen first. But yeah, I think that's you got to play it out. And so what I would probably want to see is, I would like to see, if I'm going to close this position out before it reaches the stop here, I want to see price, the 15-minute candle, close above these levels of liquidity. So if, liquidity were to close here, then I would imagine it would continue to the upside, and then that would probably mean, okay, it's time to get out and take your losses and move on. So that could be one scenario. But yeah, we're playing this out, guys. I will pause the video here and then come back once I see some price movement. Alrighty. Alrighty, guys, I'm back, and as you can see, took my take profit. So that gives me a win of $800 for the day. Again, using this strategy. As I said earlier, I was worried a little bit as far as, if price was going to come up here first and then work its way down to take this liquidity to then go back up. But I mean, it went down first. So I can see now maybe taking this liquidity and then working its way back up, then working its way back down to then, maybe make an all-time high. So, it's just the way it works, guys. I am 4 for 4 this week. And I think I'm going to stop there with this strategy because today is the last of the month. And so, tomorrow's Friday, August 1st. I may, trade tomorrow, using this strategy. I may not, but I wanted to go over what my testing did for this whole month. So this whole month I did forward testing with the strategy. Again, placing my stops in areas where people may, criticize, and that's okay. You can criticize all you want. Say all the negative things you want. Man, you're crazy putting your stop loss up there. All this, that, and the third. If I had real money, I probably wouldn't put my stop loss up there. Look, I know the strategy works. And so when you know something works. What I noticed about this strategy is when I did my 1-to-1 stop, I will get stopped out, right? So for example, if I would have done a 1-1, right? So let's do a 1-1 comparison. I would have probably gotten stopped out right there at 22 points, right? I would have gotten stopped out, right? If I just did a traditional 1-to-1. And you see, and that's what the market wants to do. Market needs liquidity. So I would have been stopped out of this trade. And all because I put my stop loss at, I could have put it right above this liquidity if I wanted to, and I would have been okay. Because I know that the market, especially institutional buyers and sellers, they gravitate toward these areas where there's a lot of stop losses. And so, I forget who, look, market is going way down here. Look, you see how it took this level of liquidity now. I'm going to take a look here real quick at how my other, how ES is doing. So I'm waiting for ES to, hit this Asia low here in order for me to take a buy position. I have to see it take this area of liquidity first before I take a buy. But I do have a sell limit order resting above the London highs, which is also an all-time high. So I probably will leave this there. But my other strategy that I do is with this one here. And this one, I'm waiting for the Asia low to hit. As you can see, my EMA, my 50 EMA is above the 100 EMA, which is above the 200. So this gives me a bullish bias. And if I have a bullish bias, then I want it to sweep the liquidity of either the London or the Asia. Now, before the New York kill zone, it already had swept the London low. So that setup is invalidated. So now the only one left is the Asia. So I'm waiting for Asia to hit. If it hits, great. We can get on a trade at the next 15-minute candle after that sweep and then continue higher, right? On a 2-to-1. That one I can do a 2-to-1 risk to reward, and we'll see that through. So, and also, as you can see, I have a notification on this. So I'm not sitting in front of this chart waiting for it to go down. I will get a notification, an alert to my phone and to here if I'm here. But I wanted to show you, look at this. This is crazy. It worked exactly as I imagined, right? There's only two scenarios that it can go in. It can, wow, look at that. That is crazy. It looks like it's going to hit that low. But yeah, look at ES. See, so now so ES took this sell side liquidity, and what is it going to do? Now it's going to go after this EARL for our fair value gap, because a price moves to either internal range liquidity to external range liquidity. External range liquidity moves to internal range liquidity. So this next level is the 4-hour fair value gap, which is a higher time frame level. So I can see this probably poking at this fair value gap and then going higher after that. And so what I would like to see, if I were to go in a position in NQ, which I'm not, but if I were to go into a position of NQ, I would want to see it raid this liquidity. As you can see, it now finally touched it. So I want to see, oh, there goes my Asia low. Okay, I just got a notification. Boom. And bam. All right, it got triggered. Let me delete this. So now what I'm going to do here is sit and wait for the next 15-minute candle. Now, I will now wait for the 15-minute candle. If it breaks this high again, I'm actually going to do 2 contracts. So I will put a stop buy here at the break of this 15-minute candle. See if it lets me. Okay. So here I am going to do a take profit. Again, if it comes up here, it may not. But I want to actually go right below this. Actually, I probably would want it right there. Maybe right below this fair value gap. So maybe 20 points. This is going to be a pretty big move here. Yeah, because this is a euro 1 hour, a fair value, 1 hour fair value gap. And if I want to do it 2 to 1, oof, that might be asking a lot. So I'm glad I'm doing this in real time, because this is how, you have to make a decision. So I want to be able to get in on this trade because it took this low, this Asia low, it could sweep up and start going up within that same 15-minute candle. We've seen that happen before. So that's why I have it at this high of this candle. Now, if it closes below here, that's fine. The next candle that opens, I will put my order in at the break of that candle if it's a bullish candle. If it's not a bullish candle, if it just continues to go lower and lower, then I'll just keep waiting again until the New York kill zone is over. If it's past 10:30 and I'm still not in the position, then I won't take the trade. It's that simple. But for right now, I'm going to leave that there. And that'll be a take profit up here. And $2,000. So this is, 2 to 1, but that's what I'm willing to do to get this 2 to 1. Okay. Nothing is set in stone, guys. Sometimes you got to take positions out. Maybe, at the break of the London high. If I get in on this level, maybe at the London high, I take off one contract just to, be safe. That's already 20 points. So that's already $1,000 there. So I might take off one contract, right? It just all depends. So really, that's what I would do. But anyways, back to NQ. So as we see here, it broke the sell side liquidity. I'm going to go ahead and delete that. And I'm going to go ahead and delete this. So on the 15-minute candle, let's see where we're at. So there is a little fair value gap. Not little, but there's a pretty big fair value gap forming right there in that 15-minute time frame. So put that and let that be. And if it does close below, if it does close within this fair value gap, then I might just, if it does close within this 4-hour fair value gap, then I can definitely see it going up here. So I might take a position at the break coming out, but I won't do it unless it's like if it starts retracing back within this 15-minute candle, I won't take a trade until the candle closes, and then I'll take a trade from there to the next level of liquidity if I were to be on this trade. But I don't really see myself taking this trade. I mean, this thing could go all the way down here. I mean, it's really nuts, to be honest. I gotta make sure I monitor that. So let me show you real quick, guys. I'm referring to my 8:30 strategy, and I don't want to close this video without showing you some data that I've collected. And you can go ahead and do your own back testing. I actually recommend you do that because I am not a financial advisor. So just a disclaimer, of course. So this is for entertainment purposes. But you can do your own back testing with this strategy. And my results are not going to be the same as yours. So let me show you real quick. Let me go here. So for this week, on the 28th to the 31st, I went 4 for 4. So 100% win rate. And this netted me 2,400. So I'll just show you here what this looked like. Again, I have a 20-point take profit, and so for the first week of July, the first 4 days, July 1st to the 4th, I went 3 for 4 with a 75% win rate, and I only did one contract and got $800 in profit. For the week of the 7th through the 11th, I had started with 2 contracts. Actually, I started with 1 contract on the Monday, the 7th, and then Wednesday, Thursday, Friday, Tuesday, Wednesday, Thursday, Friday, I did 2 contracts, and then that netted me 2,800. It was 4 for 5 with an 80% win rate. The week of July 14th to the 18th, I did 2 contracts all those days and 80% win rate with a 1,505 profit. Last week, 2 contracts. I went 3 for 5, 60% win rate, and it netted me 930. And obviously this week, I already showed you 2,400. So what does that bring us for the month? Exit here. So if we take 800 plus 2,800 plus 1,505 plus 930 plus 2,400. So that's 8,435 for the week. For the month, I'm sorry. Month total profit. What did we say it was? 8,435. So and like I mentioned in my previous videos, if my wife and I were living in the Dominican Republic, and this was a month of me doing this strategy, then I would deduct $2,000 from here, because over there in the Dominican, I only need about $2,000. That would cover our needs, more than enough. And that would leave us with 6,435 to leave in our brokerage account, right? And on top of the winning months and so on and so forth. So if you see, little by little, you can really see the power of this. So I want to show you, and since we're ending July, I want to show you real quickly what has been, because I've been back testing this for the last, I don't know, I did a whole year back testing, but I started forward testing this back in January. Some days I was not able to, so I had to do the replay, but just more or less of what I'm doing, right? And this is practice, guys. Practice makes perfect. So when I say, to practice, I can't stress this enough. This is why these programs exist, so that we can, and make sure. Yeah, it keeps going down. Hey, that's okay. Get it on the next one. But it keeps, I can't stress how much practice is needed to get a strategy really working for you, right? This is what your edge is. It's not some indicator, some signal, someone telling you to get in here, get out here. It's you honing in and pinpointing with what you feel comfortable risking, what you feel comfortable, and it is you take profit, etc., and honing in on that. And so I have just to give you kind of a glimpse, right? So if I had to start the strategy, I would, in a real account. And once I have a year's worth of forward testing, and maybe not a year, I might be stretching it there. But what I was thinking about doing is simply just taking this strategy, looking at what I have observed, and I have a log here, and I'm going to show you real quickly, looking through my notes. Here it is. So, doing this strategy, I have seen what I could have potentially won, right? And let me just show you. Again, these results are not typical. I'm just going by what I did. So in January 2025, I did 19 trades. And okay, so in January, I started using 5 micro contracts. So I only did 5 micros. So I went 16 for 19, which is a 84% win rate. And this netted me with 5 contracts. And I wasn't really doing 20-point strategy, 20-point take profit. What I was doing was like moving my stop. And some days I would take 20, some days I would take 10, some days I would do 30, 40, and so on and so forth. So these numbers might be a little bit bigger than your typical, but these were winning days. So this was a positive 785.33. Okay. February 2025. This one I did 1 NQ contract, and for all the days that I did, I was 11 for 20 with a 55% win rate, and that netted a positive 71.60 in March 2025. Let me go check on this position here. Okay, so now we're here. So we want to wait until this candle closes. So let's see how far up it goes. Let's just see how far this, if it comes up above this, then obviously, I would have missed almost 13, 15 points here. That's okay. But I can probably see this going down a little bit more and then retracing. And then I put my stop buy order right there at the break of this candle, lower my take home, right? Take profit, and work from there. So let me put alright, I'm just going to let that be for now. Let me just get back to this. In March, I actually went 100% in March. 100% win rate in March. And that netted me, and this was on 5 micros. Yep, this was 5 micros. And this netted me a whopping 19,892. Again, I wasn't specific on a points take profit. I was moving the stop loss. So, I was moving it at the below of each stop as each candle. And again, waited for that to stop me out. So I did more of a trail stop than a hard stop. And instead of having a fixed take profit, I just, again, moved it down. I could easily have done the same thing here, right? And move it down and take more, but, I'd rather just set it and forget it and be on my merry way. Let's see, April. April 2025. This I went 14 for 21 with a 66% win rate, and that netted this April 78.95. May was okay. So in May is when I started to have a more set take profit versus doing the whole because it was just taking too much time. I didn't want to be in the screens all day, so I just just do 20% and be on your merry way. May I did a 70% win rate, and that netted 3,000. And here in May, okay, so in April I did one NQ contract. In May in March I did 5 micros. In April I did 1 NQ. In May I did 5 micros as well, 5 micro NQs, and that netted me positive 3,719. And June, this was 2 NQ contracts, and I went 19 for 20 with a 95% win rate. That netted 14,400. And then July, we already see that I did let's look at the numbers. So we have 5, 10, 15, so 18 trades, and 4, 8, 11, 14, no, 8, 4 plus 4 plus 3 plus 4, oops. I think we did 20, so 18 wins, 19 plus 4, we did 23 trades, right? 5, 10, 15, plus 4 is 19, plus 4 is 23. So I went 18 for 23 for the month, 78% win rate. And that's me, 8,435. So as of today, year to date, if we add all this up, what do we have? So we got 7533 plus 7160 plus 19892, 7895, 3719, 14400, and 8435. So year to date with this strategy, I'm up 69,034. So, and in 7 months, if we want to take away 2,000, 2 times 7 is 14. If we want to do minus 14,000, so that would leave 55K in a brokerage account to continue to trade. Guys, this is realistic. It really is. Oh, let's see here. What's going on? The moment that candle closes. But yeah, this is realistic, guys. If I was living in the Dominican, this is what I would be earning. And, look, practice, keep doing these paper trading, get some prop firms that you can start with, and really let the strategies come to you. Now, this may work for you. Maybe it may not work for you. Maybe you have something else you're thinking about. But yeah, for me, I'm heading in the right direction. I'm seeing progress in the way I'm trading. I still make mistakes, as you've seen. I can make mistakes every day, make bonehead mistakes, but it's okay. You learn from them. You keep moving. It's not about winning all the time, because that would be unrealistic. As you can see, this strategy, I'm not winning all the time. Yeah, March, I went 18 for 18. I went 100%, but that's okay. I mean, look, I went, look, and just so you can see how crazy this is, right? February was my worst month. I went 55. I was a 55% win rate, right? I'm still profitable. The next month was my best month, 100%. And then I went down to 66%. Right. And so the win rates are, the wins are going to come. They're going to come, and they're going to happen. You just have to be patient and practice, guys. Think about it. A doctor, a lawyer, a sports athlete, you know, these people, before they go into the game, before they go into, you know, doing brain surgery on somebody, before they stand before the Supreme Court, these people practice their craft. They practice. And I'll make a video about how important practice is. Yes, that's right. We're talking about practice. If you don't know what I'm talking about, look it up. But practice makes perfect, guys. Why practice with real money when you could practice on a demo account? And all the demo account is going to do is going to instill good habits. Putting in the trade, keeping your stop loss, keeping your take profit, being consistent. And over time, once you're really trading real money, the psychology and the whole, oh man, FOMO feeling, it's gonna dwindle. It's not that it's gonna go away completely, but it will fade. And that's what practice is all about. I hope, I'm gonna go ahead and close this video, because I don't want to, as you can see, I'm probably gonna get on this trade right now. But, I'm gonna leave it there and get on this trade, as it happens. Wow, could have gone below, but it's okay. But I'll leave it here, guys. I don't want to make the video super long, but pause it, go back to what I'm saying, and if something rings a bell, hey, I hope it does, and I hope you have success. So look forward to seeing you guys in the next video. Peace out.